The Bitcoin illiquid supply is absolutely popping. Will Clemente, the young wizard, tweeted this morning and said another uptick in illiquid supply shock, now breaking slightly above 2021 highs, currently at the highest level that has been since late 2017. Think this local Bitcoin price consolidation is nearing an end soon. Now, what this specifically is talking about is that illiquid supply. When you get a super illiquid asset and new demand comes, supply-demand economics take over. There's just not enough circulating supply or liquid supply for everyone to buy. So when you get increase in demand, illiquid supply, price has to go up to accommodate everyone. Now, the big questions are, we know for a fact that there is an illiquid supply. We can see it on the data. We know exactly. We can prove it to you. You're looking at it right here. What we don't know is, will there be a material increase in demand moving forward? That is the big question. But if we get an increase in demand and you have an illiquid supply, the price goes up. Now, what we do think is very interesting about Bitcoin specifically is if I was to ask you almost any other asset in the world, tell me how many total units of that asset exist, tell me how many are in circulation, and tell me what are the decisions in the future about the supply, you could tell me pretty closely, but you couldn't tell me with certainty. So when you think of supply and demand, the supply side of an equation is known generally, but not known with specificity or with certainty in the future. I'll give you two examples. If I ask you about a company, how many shares are outstanding? You can tell me that. And that is the circulating supply or the market cap of that stock. What you cannot tell me is what is the total number of shares this company will ever have. Why? Well, one, they can actually do stock buybacks, so they can actually contract the outstanding supply. And the second thing they can do is they can always issue more shares, so they can expand the supply. And so again, we know today, if it's a publicly traded company, how many stocks are outstanding or how many shares are outstanding. But you can't tell me moving forward what the decisions are going to be. And so what ultimately people do is they try to go ahead and look at the supply and they try to model what do we think the supply is going to look like over the next, let's say, 10 years. And then what do we think the demand for this stock will be over that 10-year period as well. And through those two assumptions on supply and demand, you get what people think the price will be moving forward. Okay, that's how stocks work. If I then go to another commodity, let's say something like gold, and I say to you, how much gold exists in circulation? You have a pretty good guess. You can't prove it to me like you could with a public stock, but you have a pretty good guess. Then if I said to you, well, how much gold is going to be dug out of the ground moving forward and that enters that circulating supply? You could tell me with some level of accuracy, because what you would do is you'd look over the last 50 years and say, okay, how much gold was dug out each year? Let's just extrapolate that out over the next 10 years. And that'll give you, again, some level of accuracy, but you don't know with certainty and you can't prove that that is actually what is going to happen. So what you're left with on a commodity basis is we think that this is what the current supply is. We think this is what the supply change is going to be over the next 10 years. And we think this is going to be the demand. And now people have become pretty good at this. And so they can start to model out what the price will be in the future. With Bitcoin, it's different. When you take a supply demand equation for Bitcoin, one side of it, the supply side, is known with certainty. I know exactly what the total supply of Bitcoin is, 21 million. I can show you down to the individual Bitcoin exactly how many are in circulation right now. And I also can show you and prove and verify and have your eyes see that only 900 Bitcoin a day are coming into the circulating supply right now. And that will continue until the next halving, which is pre-programmed. And then we will go from 900 Bitcoin a day to 450. And then we'll go for a certain number of blocks and then we'll halve again. And so this will continue until all of the Bitcoin have been mined. And so the difference with Bitcoin is that the supply side of the supply demand equation is known with certainty. We know what the total supply is, we know what the circulating supply is, and we know with certainty, because it's a programmatic monetary policy, what the future monetary policy decisions will be. And so therefore, people are only left to model the demand side of the equation. If you know supply with certainty, you can focus on modeling demand. And so things like what Will showed us are incredibly accurate in terms of predicting what is likely to happen in the future, because we do not have to try to model supply and demand. We simply have to model demand in this specific asset. And that's why things like the stock to flow model and others are so deadly accurate.